Today in the grain market, soybeans dropped 52 cents. The basis did fall 13 cents since May 1, and it really gave the market a little more momentum on the downside. Now, there's always been talk about rationing of demand. Perhaps that's encouraging more acres. That would put a little bit of a lid on the market. And technically speaking, we are in a full-out correction. But it still looks like it's kind of early to have that top being in. But of course, we'd have to do more work to take out the highs once again. But this is certainly how the market starts to function. The combined chart for all three commodities, corn, wheat, and soybeans, was up over $32 just 3 days ago, and now it's at $28.80. So that's a $3 loss across the board on all three grains. That being said, I think that there's a few things to take a look at. Now, in June, the 1620 and 1640 calls have had the most market action right now, pretty much all closing, but that's a little bit of the higher ups. And as the market starts to roll to the deferred months, that's expected. Right now, from the CVal index, the volatility has moved down to 22%. Now, corn was lower today. Commercial demand has pretty much all but stopped. There's drier weather in Brazil, and that should actually be great for U.S. Corn producers, but today, right now, the futures seem to be a little bit more sympathetic to the soybeans and the wheat, really moving much lower right now. The 650 calls is the most active of the option strikes, and the CVal index jumped back up to 37.75%. So there is a little bit of a spike in the market, and that's because we're having big and wider moves. We expected that. That's why the CME did expand those limits to allow the market to move freely. And at these prices, we're going to have wider moves. Now, wheat did fall today as well. There's rains that did ease the drought conditions right now, but the Wheat Council tour established that 59.2 bushels per acre versus the USDA 52. I think that also helped, sending the market a little bit lower right now. I think that the futures are down really like $1 in the last 2 weeks. And that created some of the movement in options where the out of the money wings started to come down. And that just means there's a little bit less activity, or that we're basically in an area where we're going to stay until the market starts to move and push a little bit higher. Now, the markets have been an overbought situation, and now they're sensitive to the news, and that really is a recipe for more volatility. And of course, we did get that today. But I still expect that the market still has plenty of room to run, but we'll see if traders step back in. One thing to note is that the commercials, while they did stop buying, they haven't really started to sell anything right now, so they're hanging on to their longs at this point.